9:34 a.m. The Bank of Japan raises rates. Your Bloomberg terminal is already moving. Somewhere in your book of business, 14 clients have Japanese equity exposure, but you don't know which ones. You don't know by how much. Your phone starts ringing. The average advisor takes 4 to 8 hours to figure out what to do. By then, 3 clients have already called your competitor. And that is the problem we set out to fix. The underlying problem isn't speed, it's fragmentation. An investor's wealth sits across deposits, investment portfolios, property, private assets, and digital wallets in completely separate systems. Because that information is never unified, the advisor doesn't have a complete view
of a client's true financial health. They cannot spot risks early, and they can't access resilience. And when a market event happens, they're reacting blindly. 500,000 relationship managers globally, managing $140 trillion, doing this in just spreadsheets and email chains. Here's what everyone building in this space gets wrong. Portfolio construction is already solved. There are robo-advisors, index funds, and algorithmic rebalancing. It has been commoditized, and anyone can build a near-perfect portfolio from scratch. The real problem is everything that happens around it. Unified visibility across all asset classes, broadest metrics that actually reflect a client's full balance sheet, and event-driven intelligence that's specific to each client's actual holdings. That's where advisors lose hours every day on. Wealth OS is an advisor intelligence terminal. It unifies traditional and digital assets, computes financial wellness metrics, detects event-driven portfolio risk, and generates
Let me show you how Wealth OS works in practice. On the dashboard, the advisor can switch across clients and instantly see a unified wealth view, net worth, portfolio composition, wellness score, and key risk indicators. These are deterministic analytics, including liquidity runway, debt service ratio, diversification, concentration risk, and digital asset exposure. Next, we move to the Event to Impact Alert Center. Instead of showing generic market headlines, we take a market event, map its entities to relevant securities, check which holdings the client actually owns, calculate exposure, and classify severity. So the same event can create different priorities for different clients. From there, the platform generates an advisor-ready brief. The important point is that the financial numbers are not generated by AI. They are computed by the backend. AI only helps structure the recommendation clearly and quickly for client outreach. Then, in Advisor Copilot, the RM can ask a contextual question like, what are the top 3 actions? The answer is personalized to the client's actual wellness profile and portfolio context, so it is actionable rather than generic. Behind this is our HouseView research layer. It retrieves from the firm's own approved research, so every recommendation can be grounded in internal evidence, aligned with the bank's view, and explained clearly to the advisor or client. Technically, the system combines a tight Next.js front end, a fast API orchestration backend, a deterministic financial analytics engine, an event-to-impact pipeline, BM25-based research retrieval, and LLM-based grounded advisory generation. In short, Wealth OS turns fragmented wealth data into proactive, explainable advisor action.
$140 trillion in private wealth under management, 500,000 relationship managers globally, and each losing 12 to 18 hours a week to fragmented data, manual research, and slow event response. That is over 4 billion high-value advisor time wasted every year, a work that can be automated today. McKinsey recently replaced a significant portion of their junior analyst work with an internal AI model, not because the analysts weren't capable, but because the work was unstructured, repeatable, and high volume. And wealth management has the same profile. The research synthesis, the exposure mapping, the client outreach drafting is structured, is repeatable, and it happens at scale across 500,000 advisors every day. And that is the replacement opportunity. Unlike a consulting firm, the output here isn't a slide deck, but client relationship. And the advisor that moves faster with better information keeps the client. And that's how they'll get